Nothing that we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Good morning, everybody. Cowboy here, 8:25 a.m. EST. We're coming on just a couple of minutes early. We got the PPI data drop. All right. So what does that mean? What does that mean to us traders? Well, that data that is coming out in about 4 minutes, it's like the CPI that came out yesterday. And the CPI, made a difference in the charts, certainly. And the PPI is the producer side. So CPI is the consumer price index. It's an inflation measurement. And if you are watching any of the financial news, if you're paying attention to finance and, just all the talking heads, inflation is the biggest talk. And where inflation is will determine whether or not interest rates get cut in one of the future Fed meetings, right? And where interest rates are really not determined by, but where CPI is, the number that CPI, gives us will be a very big determining factor as to whether or not Jerome Powell will hike, pause, or cut rates, right? So that was yesterday. Well, today is PPI, and that's the producer side, right? So it's about as important as the CPI, and it can move the markets almost as powerfully. So the estimate versus reality is what we have to watch. So let me jump over to the data really quick here on the screen. Looks like I might need to adjust the screen. Give me a second. Okay, there we go. Now, today is the 12th. PPI comes out in 2 minutes and 30 seconds. And you can see yesterday's CPI was actually a little bit lower than expected, which is why we saw some of the action we did yesterday in the markets, right? And anytime we have action, we can make money trading it. Well, PPI is producer price index. So instead of CPI, which is what the consumers, that's everybody, you and me, are all paying, right, for all of our goods and at the store, milk, eggs, whatever. The PPI is what the producers are paying. It's like the people running the factory, what their costs are, because if their costs go up, our costs go up. So it's about as important as the CPI, right? So that's going to drop in 1 minute and 45 seconds or so. You can see the countdown timer just above my head right there. So what we'll do is we'll head back to the chart. Now I'm watching the NASDAQ, and the NASDAQ is kind of a key thing to watch. I mean, it's the stock market. Everybody's retirements are in the stock market. Tech is a big sector. The Dow has been a bit more exciting than the NASDAQ lately, but a bit less tradable if you ask me. So I'll stay with the NASDAQ, and we're going to jump to a lower time frame so we could actually see the effect of whatever the data is here. So let's zoom in, and we're going to see what happens when the PPI drops here. See, this is 6:30. Okay, let's go to yesterday's. See, are we get? Yeah, we got time for this. We'll go to the CPI drop yesterday here. So we had 6 there. There it is. So the CPI came out. You can see here on the 1 minute chart, the prices did cram up pretty hard yesterday at that time. Now that's on the 1 minute chart. So we're zoomed in pretty far, right? So the effect is magnified. Well, if the PPI print is cool like the CPI was yesterday, which it's any minute now here, any second really, then it would push upwards. Now, cool means below expected, right? So let's zoom in, see what happens as the clock ticks over and the data is released. Then I will have on a different screen what the data is so I can report it. That way we can just continue to watch. Then we get about 10 seconds left here. Now, a lot of people, what they would do is they would try to guess what the PPI is going to be, and they'll have their trades ready to go. I think that's a mistake. We'll see whether or not that was a mistake. Here we go. It should be any second. Okay, we're seeing a little movement upwards. We'll zoom in a little bit here. See, what happens is a lot of times people will use whatever data they can get their hands on. And I can tell you right now, it's a cool print. And the unemployment was actually not healthy, which in a way is healthy for prices, right? So the unemployment claims came out at the same time. The PPI was a cool print across the board, right? But the price of the market, like the NASDAQ futures, is really not doing a whole lot. Let's take a look at EUR/USD. That was a much bigger. Oh, there we go. Look at that. Now, the NASDAQ futures market is probably going to move slowly because, the stock market's not quite open yet, right? So that's the futures, which that's going to run all night long. But you can see here that the euro popped up nicely, which is a signal of dollar weakness. So just to move over to the data really quick, you can see here that instead of 0.3, it was 0.1% month. Oh, that's PPI month over month. So we were expecting a 0.3% of inflation. We got 0.1%. That's disinflation, meaning that the inflation is slowing down. Same with the regular PPI month over month, which excludes certain items like I think fuel or something like that. And that is a 0.1% move up instead of 0.2. Unemployment claims were just slightly higher than expected. So these are signs of economic weakness, which in the terms of the market, what does that mean? Why do we care? Like, why does this push price up? First of all, let me go ahead and fix a couple things on my screen. Give me just a moment here. Got something I got to fix here. There we go. Now you can see the candles a little bit better. Apologies for that, and also apologies for my allergies. A little bit sniffly right now. When the data comes out to make the economy look weak in the current environment, what that means is that the interest rate practices, if you will, holding rates a little bit higher for longer, all that stuff. What that's done is that has, according to the numbers, tempered inflation, right? Now, are these numbers real? Are they fudged? Are they fake? Who knows? But the market's going to act as if they are real. So we will go ahead and talk as if they are real. And if that's the case, then inflation is slowing down. And so if inflation is slowing down, the wisdom, if you will, is that we might see a cut in interest rates. Now, a cut in interest rates means what? Why does this mean markets will go up like this did? Maybe Bitcoin did. We'll see. Yeah, Bitcoin made a nice pop up right there. I'm sure that NASDAQ will follow along. Maybe once the market opens in an hour, we'll see. USD JPY moving down also. That makes sense. It all fits. It's essentially an assumption of dollar weakness. That's why you're seeing this. And it should correlate in the stock market once it opens. We'll see what happens. But why? Well, the reason is that when the financial world thinks that we're going to see a rate cut because these data come out a little bit weaker, well, when they think that, they're going to try to get ahead of that. Now, a rate cut means that money gets cheaper. All money is debt. So for money to go into the markets, which is what it does, it's always borrowed. Whether you're making that money at work, whether people literally borrow it in a loan, all money going into markets is ultimately borrowed because that's how our money works. Our money is all debt. So when money gets cheaper because interest rates get lower, it's easier to borrow money. Therefore, money goes into the market because at that point, holding just cash is not as good of an idea because the interest rate is lower on cash. You're not making as much money comparatively on cash. So therefore, it's more advantageous to take your money and put it into the market, which causes a positive feedback loop because more people want to get into the market before everybody else. And then you see pop-ups like this. And that's why this happens. Now, it's pretty tough to determine what's going to happen with CPI and PPI. I actually did like a 10-year study with the PPI and CPI data to see if there was a correlation. Let's just say, because they're usually one after the other. You get one on a Wednesday, one on a Thursday, or maybe one on a Tuesday, one on a Thursday. It's always the same week. And I'm like, well, if the CPI is cool, would the PPI be cool? Kind of makes sense. Be a nice way to predict what's going to happen. So I took the data, mapped that out on a spreadsheet, did a few formulas, and found out that there is no correlation that can be found, which kind of makes sense because, why would the market just give away correlations? Not such an obvious one. So I did try to game that out and say, well, the CPI came out cool, so we know the PPI is going to be cool. Like, no, not always. And actually, it's not predictable. So, for those of you smarty pants who thought the same thing, sorry, Charlie, it doesn't work that way. Let me get V the Grill in here. He is waiting for a link from me. All right, there we go. And I need to ask you to hold on just one moment. Apologies there. Like I said, I'm dealing with some allergies. Give me one moment here. Hey, V, give me just one moment, brother.
Hi.
And it has been a tough allergy season for this year. It's been crazy.
Yeah, I've been. It's been affecting my voice.
Yeah, okay. I don't know what it is. It's like a weather thing or something like that. But we were just kind of talking about why like the PPI, CPI data affect the charts. You can see that big fat pop up on
Oh
EUR
yeah.
USD, right?
Yep.
So that was it's tough to try to use that data to trade. I don't recommend doing it, or at least I would say the best thing I ever do is wait for the data to come out, ride the volatility afterwards, because there are a lot of people, what they try to do is they try to like, they try to run that trade. They try to, oh well, it's going to go up, so I'm going to go along, and a lot of people get screwed. They end up getting knocked out of their trade. And I mean, come on, think about it, right? You are whoever the master of the financial universe, and you know everybody's going to try to play the game. So you knock them out of their trades to make money. It's like you're stepping into a trap trying to trade news, unless you are extremely wealthy or extremely technologically adept, and you know how to use tech to really trade that very quickly, almost like high frequency trading. And I know like one dude, who consistently made money on news announcements. Like I know a couple guys that get lucky, but I knew one dude who was able to do it.
Hmm.
So that's that. But yeah, man, it's good to have you on. We're still with the public here. I started a few minutes early so we could see, how the news affects the market and all that. But anything? I know you got some juicy drips today, right? We're still on YouTube, so don't say anything. But maybe for those who might be new to watching this,
I,
can
I
you
have
tell
to. I
everybody
have to
what
hold
drips
on.
are about?
Yeah, I have to hold on to the drips. I gotta actually push it to tomorrow. There's a piece of data that was pushed forward, so tomorrow would be it. Tomorrow I'd have everything.
So what are drips though? Kind of maybe tell
Or
the
what?
audience what that's about.
Say
And I
again.
don't know if you can add a little volume to your mic.
Oh sure. How about now?
That's good.
Okay. So the drips for tomorrow, we're gonna cover not only where things are with the market here in terms of stocks, but most importantly, what a lot of people are interested in is going to be the crypto market. What's it looking like? Where are the future moves? And what's happening behind the scenes with coins, with regulations and stuff. So it's going to be a very interesting one. So you'd want to definitely be cued in on that for sure. And I recommend people that, you know, if you're not a member, join because you're going to get some real amazing intel with what's happening. And I'll leave it at that, Cowboy. I don't want to say it's too much.
Well, sure, yeah. I mean, that's so. Look, here's the deal. Sure, we're going to teach you how to, look at the charts, predict the charts, trade them. We're going to teach you how to do things like build that little green tab that you see right here. Like, we don't actually do the coding aspect of it. You pay someone else to do that. But that little tab called the move up right there. And I developed that algo, and I paid a coder to code it. And we teach you how to develop the algo. We teach you how to extract money from the markets on a regular basis, like this one here, like that one here. That's something I built using a method that I teach you. Now you're going to have your own DNA to your algo, which this is encouraged for a number of reasons. First of all, the hundreds of hours or thousands really that went into making this, I'm not giving that away for free. Secondly, you want your own like spin on that. You want to have your own personality in your algo. Now, the other half of Algo Factory, V the Gorilla, has given us some tremendous data when it comes to the broader market, the crypto market, precious metals, like all markets and geopolitical. So, V will come in when he has information, when the world provides, right? First of all, V, you do some pretty big deals around the world when it comes to metals and when it comes to crypto. So you're an institutional trading type of guy. So you are talking to people at a very high level, and people at a high level, they have a better idea of what's going on because that's why they're at the higher level. So V is able to share whatever he is allowed to share, whatever he can share without breaking any rules. And we get that at Algo Factory. And then maybe you'll hear it like a month or two or three later on Rogue News or, somewhere else. So that's a big part of Algo Factory, what we got going on. V, before we flip over, like, what do you think the last bastion of, as time goes on and robots are harvesting everything from the fields and, they're cleaning our houses and robots do it all. What do you think the last income generating mechanism will be?
It's going to be AI trade. It's going to be trading, basically.
Yeah, I think so too. I mean, look, let's think about this. All the big brains that would have gone to other industries have gone to finance because that's where you make money. So if you don't think for a minute that AI has been in finance like for a long time, then think again. AI is already there. I mean, I'm not an AI guy. I'm not even a coder, and I build algorithms that are successfully predicting the direction of price. You don't think 10 years ago that the top muckety mucks were doing this already? AI and all that's been in finance for a long time, and trading still happens. So I think that trading is not only going to be the last thing to go, but it's also at this point AI proof. So you got to think about that. I mean, look, if AI was screwing it all up, nobody would be in markets, and then it would just be like no way to make money. They're never going to do that. They're not going to ruin their own marketplace. So if you're afraid that AI is going to take your job, I would consider coming in to learn how to trade. And that's kind of the message here. Via the Gorilla, can you get us over to the private live lab?
Absolutely. Guys, don't sit there on the sidelines wondering if you want to try this out. You try out Rocky Road Ice Cream. You do, Algo Factory. And with that being said, guys, join us, get the inside information, not insider trading, but inside information analysis, and learn how to build your algorithm so it can trade on your behalf 24 hours a day, 7 days a week. Join us, algofactory.tech. Take it away, Cowboy.
Join us or die.
Haven't done the join us or die thing in a minute.
Yeah.
But, don't worry. Alan Rickman's just kidding. You're not going to die. We love you. See you next time.